Good afternoon, everyone. My name is Mark, and I am also known as the stock market jobber. I have like to teach people about trading, and I have a good background for it. I was the head of trading at three different institutional money managers. I was a market maker. I've traded directly for two of the best in the industry. So when it comes to trading, there's not too much I haven't seen. And today, I want to explain to you why gaps form on charts. A gap is like something like over here. It's price levels that a stock doesn't trade at as time goes forward. For example, on this particular day, the closing price was here. The next day, it opened down here and closed here. So we didn't trade at these levels. That's a gap. There's gaps here. The old saying is gaps refill, and it's true, and I'm going to explain to you why. Now, it's important to understand this is a very common phenomenon in stocks or any kind of financial market, actually, that a level that was support can somehow mysteriously convert into a resistance level. And that's what happened here. Now, why does this happen? Well, this is because of market psychology. There are people who bought the shares here who, when the price went lower, they experienced buyer's remorse and tell themselves, I want to get out, but I don't want to lose any money. So we have remorseful buyers placing sell orders at their buying price. If there's enough of these remorseful buyers placing sell orders, the level that was support converts into resistance. Levels that were resistance can convert into support. This is the opposite. This is seller's remorse. People sell, and when the price goes higher, a lot of the people regret selling and they tell themselves they're going to buy their shares back, but only if they can get them for the same price they were sold at. So if we have enough remorseful sellers placing their buy orders at their former resistance level, the level turns into support. So buyer's remorse can turn support into resistance. Seller's remorse can turn resistance into support. It's very common, and you can see it on virtually any chart you look at. Now I'm going to explain to you about gaps. So the market gap down here. There must have been some news, probably earnings, I'm not quite sure. But we closed here. The next day, this was our high. This is just a 5 month chart. We were just looking at the 10-month chart, but it's the same stock. It's Amazon. So it never traded in these levels. This is a gap. And now remember the expression gaps refill. Come over here and we gap up and we gap right through these levels. Now, why is that? Well, we saw that remorseful buyers placing sell orders forms resistance. Well, when a market gaps like it did here, it never traded at these levels. So if it never traded there, there can't be people that bought it that are trying to sell it and get out. So you're going to have a lack of sell orders. Buyers are going to need to be willing to pay higher prices, and that drives the price up. Here, it just shot it up. Now look what happens back here. We gap back down. What's one of the reasons for support? Well, we don't have one reason for support forming is remorseful sellers placing buy orders. If the shares gap through these price levels, well, it didn't trade there, so no one could have sold it. So there's not going to be remorseful sellers placing buy orders, which creates support. So what gaps down can gap up, and what gaps up can gap back down when the shares or the price or the crypto or whatever it is you're looking at gets back to that uh, those price levels. So they say gaps refill, and whoever they are correct, and that's why. All right, thanks everybody. Don't forget to sign up for our community here. Please subscribe to my YouTube page, and check out our website stockmarketjobber.com. And I will talk to everyone soon. Thank you.